how does this end? How in the world are all these governments going to come to a collective consensus that they can trust each other when everybody is racing to debase their currency, right? And so then I see Bitcoin, I'm like, finally, here's something that actually solves this massive, huge engineering problem.
Hey everyone, I'm rounding out the month with another huge guest. I'm so excited to have my friend Preston Pysh back on the show. I've had Luke, I've had Lynn. I'm so excited to chat with you, Preston. We've got a lot to talk about.
There's always a lot to talk about in this space. Good to be here, Natalie. Thanks for having me.
It's been a really crazy month, like total roller coaster, so much volatility. Bitcoin's up, Bitcoin's down, but all the things on the macro side have been really surprising with bonds. So I want to cover it with you. Let's start maybe with macro, the trade war, zoom out 30,000 foot view from above. What are you seeing right now? And how do you think investors should be looking at it?
You're finally having the tectonic shift that I've kind of been arguing that has been happening since COVID happened, seems to be now hitting full scale politics, especially with the new administration, where the new administration came in. They've identified a major issue, which many of us have been jumping up and down and screaming about for years, which is if you continue to run this trade deficit and you incentivize all the production of goods and services to be done outside of your country, you're left in a state of complete impotence where nobody in the country can do anything as far as making things for yourself. You're reliant on all these other trade partners that are outside of your domain. And when you think about the implications of that, especially from a Department of Defense and security standpoint, Luke Groman had an amazing tweet. He said, a lot of people that look at the dollar will jump around and say, oh, well, it's backed by military might and our force, right? But then what backs that? And what backs that are the raw materials that are the inputs to creating F-22s and creating all these like highly technical defense security products that DoD pumps out. And so if China says that they don't want to export precious metals and all these like really core components to the US, who's going to win that battle of wills and might and it goes to the dollar itself? What is actually backing the dollar if these core components and these inputs to the advanced technologies that we have that are supposedly securing the dollar aren't there? And so that's what this is all really kind of coming to a head with, is for 40 years under the petrodollar system, the incentive that was in place was currency arbitrage. The incentive that was in place was we can produce it a lot cheaper than you can locally. And this whole globalization effort was like, just hammering home that was the incentive structure for decades. And now it's all starting to unravel the other way. And at the core of that, at the core of all of that is the people go to China, go to wherever where most of this stuff is being produced. And you have to say, well, why don't they want to accept treasuries anymore? And the reason why is because they can do the math and they can see that we're in this very precarious situation fiscally, and it's somewhat out of control. So now you have a new administration that came in. They've recognized this. I would argue that they won on this whole narrative of we've got to change this. We got to make America great again. And the way that we do that is we start onshoring work back into this country. We start taking control. Now, I want to preface this because somebody hearing me say all this stuff might think that I'm like an avid, staunch proponent of this political, but that's not what I'm actually saying here. What I'm saying is it's been recognized that this issue exists and they've campaigned on a potential solution to it. Now what it really comes down to is the capacity to actually execute this strategy, and what levers do you actually hold to re-incentivize onshoring without there being total massive disruption and chaos in the process. And that's where I've got a lot of concerns, obviously, on how you actually go about that from an application or an execution standpoint.
Yeah, let's dig into some of that because when Trump got elected, I mean, it was heyday for the stock market and Bitcoin went to a new all-time high. Everyone was so excited. He's the business leader president. But now it seems like this is all orchestrated. Like everything is being done on purpose. Do you think that they know what they're doing with the end goal to be to restructure the system away from the dollar as the reserve asset? Or do you think that there's just a lot of hubris and they assume that we have more negotiating power than we do around the world, and that they're going to be smacked in the face when countries like China do what they're doing, which is basically saying, no, we're not gonna like fold and cave in to the chess moves that you're playing.
Mm-hmm, mm-hmm. Uh, to address the first part of this, which is the markets went crazy when he came into office. What I think everybody was anticipating was you were going to have Trump 1.0 and not Trump 2.0, which 1.0 was very he talked a lot of this stuff, I think, in the first administration, but from an execution standpoint and what he actually did was just more of the same of current policies for under the petrodollar system, which was let's just juice the markets, let's do all these things. And so anybody that saw him get elected this time was like, oh, more of the same is on the horizon. The market's ripped. And then what they realized was it's not the same policies and it's not the same people on the staff that are like they are truly trying to navigate this in a completely different direction on this administration. Whether they're successful or not, it's a whole nother question, but they're attempting to do something very different than what they did the first time around. So I would start there. That's why you saw the markets rip. To your second, help me out on the second part of the question, which was actually more the core part of the question, Natalie.
Coin Stories is brought to you by Genius Group, a Bitcoin treasury company listed on the NYSE under ticker GNS. Genius is on its way to hodling 1,000 Bitcoin in its treasury while educating the world on a Bitcoin-first future. Genius is launching the Bitcoin Academy with courses from Safety Namoose, author of the Bitcoin Standard. Join the launch waitlist via the QR code on the screen or the link in my show notes and receive the weekly Bitcoin Treasury newsletter. Genius isn't measured in IQ. It's measured in BTC. Next up, a quick word about my friends at Bitwise. They've been educating investors on Bitcoin for more than 7 years, have over $10 billion in client assets, and a team of 100 plus. Their weekly newsletter is a must read. It's written by their CIO, Matt Hogan, one of the best minds in the business. I highly recommend it. It's witty, bold, and quick. Takes just 5 minutes to read each week. So head over to bitwiseinvestments.com/CIO memo. And always, of course, carefully consider the extreme risks associated with crypto. Coin Stories is also brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and high-performance computing for AI. Bitdeer trades under the stock ticker BTDR and boasts a massive 2.5 gigawatts of electrical capacity across 3 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Learn more at bitdeer.com. Don't forget to join me in BTC Vegas this May and attend the 4th annual Women of Bitcoin Brunch. Use code HODL for 10% off your pass. Do you think that they know what they're doing and they're kind of strategically allowing this to bleed out and cause pain in the market and assets to crash in order to execute on some kind of plan? Or do you think that no, actually they expected things to go another way and for every country to just come to the table, including China, do what we want, and we have the power to, onshore and negotiate a tariff with all these countries and all that?
So the challenge goes back to what I was saying on the first responses. To do this stuff successfully, you have to have the better cards. Like if we're sitting at a poker table and we're both trying to bluff each other, but sometimes you hold some really strong cards and you really don't even need to bluff that much. Like you're going to win because the odds are you have better cards. Mm-hmm. And when I'm looking at the hands that are being played here, in my opinion, the side that actually is conducting all the production, because they have all the core infrastructure in place, they've been doing it, they've been incentivized to do it, it's all there, right? They know the whole world needs chips, they need these types of rare earth metals, they need all these inputs. And so who has the better hand in this negotiation or this rewiring of global commerce? And I would argue, I think it's the rest of the world. I think the rest of the world is actually sitting on a stronger hand. But for anybody that's ever played poker, that doesn't mean that you'll win,
Mm-hmm.
because sometimes you can just bluff better and sometimes you can just play your cards better. And so what I would argue is playing out right now is you have, the world versus kind of the US. Everybody's kind of got their hand. And people could make the argument that we have a strong hand, especially with how much we consume. Good God, we consume a lot.
Yeah.
And you start taking that away from a country that is like heavily dependent on that consumption continuing to happen. You can make the argument that that's a pretty strong hand.
Mm-hmm.
But I don't know. They can print too. There's other countries that they've got pretty massive printing presses as well, and they can print too, and they can offset some of those losses and things with, cramming more paper promises down the throats of their citizens. And I don't know how it's going to really unravel, but I do think that you're going to have, I think what we've seen so far is Trump came out, his administration came out with some really, really like strong opening moves and be almost like, you're playing poker and you got your two cards, you're playing Texas Hold'em, and it's just like, I'm all in on the very first, round, and nobody even knows what the next three cards are. And so it's just kind of it was a bold opening strategy. As the market started to tank and adjust to what that actually means, which is, oh my God, there's a ton more risk here than what I thought. It sucks up a bunch of liquidity out of the market, and you saw what happened across the board in markets. And so the opening move was bold. I think the counter is probably going to. It seems like the Chinese counter is, we're not even talking to Washington. Is kind of the response back. I thought it was also interesting that Trump had to basically take the tariffs off of everybody else to at least put a little liquidity back into the markets by the way that they were messaging. Boy, doesn't it tell you something with just the verbal messaging and how much it's moving markets to the tune of trillions, to show you how precarious and volatile all of this has become, and kind of the an example of the times that we're in with respect to fiat and how volatile it is and precarious it is. So, it really comes down to both sides. So like, I could look at it just myopically at the Trump side, but they're just one participant in a system that is super complex with a lot of other participants. So each time somebody moves, the other person moves a little bit different. And it really kind of, and then you have Powell, like, let's throw in just Jerome Powell and how he seems pretty hesitant to be dropping rates on top of all of this. So that's like yet another very important variable. I was on another show talking this point, but I think this point is so important. One of the things I learned during COVID that was just super demonstrative for me, that I never had an appreciation for, was just how insanely powerful these central banks are. Go back to like March 2020, and everybody's at home. Nobody's working, right? Everything was shut down. Markets start to tank. And it lasted for like 20 to 30 days where it was just going down. And Natalie, from what I could tell, like, this was going to be a crash of such epic proportions that you'd never see the light of day on like what it looked like from a production standpoint, GDP standpoint, like contagion standpoint. And don't you know, like 30 days later, we were hitting new all-time highs in markets. Mm-hmm. And people were still at home and people were not working, right?
Right. That K-shaped recovery. They're always standing by ready to re-liquefy the markets. And they've said that when there were all these tremors in the last couple of weeks, the Fed officials said, we're ready to step in and basically print if necessary, right?
Yes. But what my core takeaway was, because I don't think we've ever had such a demo of like how powerful these central banks are to reflate markets. What it taught me was, you can have all these opinions on like, oh, we're going to pump into the end of the year, or we're going to do this into the next couple months. What I learned through that experience was, depending on what outcome or what decision is made and how long they let the contagion set or how fast they come to the rescue to pump the markets with more liquidity, it's really, really hard to be able to make short-term forecasts and
Mhm.
have any semblance of an idea as to what you actually think is going to happen in the
Mhm.
short. In the long term, we know they're going to print.
Yeah.
We know
Yeah.
they can't let things get too dysfunctional. We know that that when we look at the math is just going down the toilet for fiat, and that there's a solution to that, which is Bitcoin. And so it's really easy for me to just look at the long horizon and say they've got to print, they've got to do these things. The more that they really kind of duke it out and fight each other, the more they're going to have to print to offset them,
Mhm.
which I think is more bullish and accelerates the Bitcoin timeline for its performance. But if they don't, and they are somewhat amenable to like each other, and they're working with each other, some of that takes maybe a little bit slower, and it's not as violent.
Right.
So much of it comes down to like these factors. And the great thing is, as a Bitcoiner, we don't have to think too hard about it. We just got to continue to, add value to society, make a little bit of extra money, take that extra money, put it in the Bitcoin and store it, and just, keep your head down and keep working and trying to provide value to others. And it's, it seems to work out pretty well for Bitcoiners. But
Yeah, and Bitcoin has been really resilient in the face of all of this. I mean, usually when the S&P draws down 20%, Bitcoin's down like 40 or 50, and it's been volatile, but it's been chopping and nicely recovered into the 90s. But gold specifically has been very interesting because it keeps getting bid up and the central banks are buying it. And so Luke Groman, who's one of both of our favorite analysts, he keeps saying that there is this tectonic shift happening back to a neutral reserve asset. And that is really part of the plan. And that maybe they're even allowing gold to bid up as high as 5,000 so that we could revalue the gold on our balance sheets and then wipe out some of our debt. Are you in alignment with that, or what do you think is ultimately the plan with gold?
um I honestly, I just don't like gold. I have a bias where I just really don't like gold. So for me, it's hard to provide you an unbiased opinion when it comes to this. I think gold will preserve buying power for the individual, and I think gold will continue to fail anybody and everybody from a sovereign level, just like it has throughout millennia. And so, I think it's going to be personally, I think the way it's going to go down is they're just going to revalue the gold that they have on hand, whatever that amount is, which is, it's funny, your husband and I were literally sitting in DC trying to understand how this works. My understanding is that it's marked at this super low price. I forget what it's at. It's like $25 or $35.
42 an ounce. Yeah.
42 an ounce is what it's marked at today. And if they mark it at the new level, they basically print the difference, they shove it into the TGA, and now it's quote unquote marked at the higher level. And then they can take all that cash and do anything they want with it. They can fund the government, they could go buy Bitcoin, they could do whatever. So there's no gold that moves from the vault that's there. Who knows if it's there? You got to trust the audit. You got to trust the AI pictures that they might generate. There's no way to audit it, right? So then that's the core issue from a sovereign level of like why gold always fails. So I think it's going to be used as a tool like that. Now, when that's done, I don't know. Is it going to happen this year? Is it going to happen, under Trump? I don't know, but I think eventually all roads, based on the incentives, I think all roads lead to them revaluing the gold, taking the cash that they print, uh,
Yeah.
which just inflates away everybody's buying power by them doing that because it's just an accounting trick of printing more fiat. Um,
Yeah, I think the thing that still confuses me is Trump literally ran on wanting the dollar to remain global reserve currency, but everything they're doing is incentivizing everyone to turn away from treasuries and the dollar as global reserve currency. So that's where I'm just confused. I'm like, do they know what they're doing? Or do they just have such an ego that they think they're going to get away with everything and maintain the dollar's status? Or is this like a plan that they're working where they will move to something like Bitcoin eventually? I don't know. That's the thing that worries me, I guess. That leads to the uncertainty.
I would say that they understand what's playing out. I suspect they understand that the dollar is in a very precarious spot.
Yeah.
And I
Yeah.
would just the rationale or the reasons why I would say that, look at Howard Lutnick. Like,
Mhm.
you listen to any of his interviews, he clearly understands what's happening here. He clearly understands why you own Bitcoin.
Yeah.
Look at the Trump's two kids.
Yeah.
They're one of them's on the board at Metaplanet.
Yeah.
Uh, they're one of the oldest one, Don Jr. I heard him speak at there in DC, and he was talking about how he was like debanked during the last administration, and so I think they're also understanding it from a political weapon standpoint
Yeah.
as well. So I think that they actually deeply understand kind of like what's at play here. And I
Mhm.
think they can very quickly put themselves in the shoes of, name it, any country that is an adversary to the US, and how we use the SWIFT system as a weapon to debank countries at large. And I think they can quickly come to the conclusion um, that Bitcoin is a very, very different beast, and something that you don't have to be friends to agree on the
Mhm.
exchange of it, because you're going to actually get it when it shows up in the account, and that nobody can claw it back. And so I think it's really powerful that they seem to understand it.
Yeah. No, I agree with you. One thing that I've been thinking about recently is what you said on a podcast, I think a couple years ago, about how our economy is turning into like contractions,
Yeah.
where a woman, as she gets closer to birth, they get more and more intense. And we're
Yeah.
seeing that with sort of the volatility in the markets. And they're able to come in always and paper it over, just like they did with the Silicon Valley Bank, that tremor in the market. Now here's another one they're standing by. But can you kind of talk about that analogy and why ultimately this only goes to one place because of the math, and why people really, even if they haven't taken Bitcoin seriously in the past, they really need to start looking at it, because to your earlier point, this all leads to the money printer.
Yeah, I look at it just, it's in harmony with how nature operates. My undergrad's in engineering, so I guess I look at things from an engineering lens too, where it's magnitude and frequency. And when something's starting to break, and it's starting to unravel itself, a machine's starting to eat itself. What you find is that the frequency often picks up, and the magnitude also in the wave is starting to blow out. And I use that as an example because everybody that's ever had a child, or the labor process, is familiar with the frequency starts picking up. They happen a whole lot faster, and it gets way more intense and a lot more painful. And it's a perfect example for a system that you're birthing something new, Bitcoin, the new financial system. The old system is you know breaking down. It's getting more painful. So yeah, I don't know. That was
Well, we're definitely seeing those contractions in the bond market, because we're seeing
yeah.
something that I think no one has seen before, right? Where usually, if we go risk off in the equities, everyone turns to bonds. But something's been different. So, can you kind of break that down, especially for people that maybe don't follow the markets as closely, and maybe bonds are a little bit intimidating to understand for them? Can you break it down very simply what's happening?
Just think of it like this. So, under the petrodollar system, yields just kept going down. Like, if you talk to somebody who borrowed money back in the 1980s, the interest rates were really high. In the 90s, they were less than that. The 2000s, they were less than that. And then, 2010s, it was even lower. Most people were, their biggest assets, their house. So, through that process, they're like, oh, I can borrow more money. But what they rarely talk about is the thing that goes hand in hand with that, which is the house prices were more. Like, the underlying house price just got higher and higher. So although you could borrow more money, the house price is higher. So is there really kind of an advantage there? And it's really not. It's a wash. And what you get is, when those interest rates were going down under the petrodollar system, because you had more and more global cooperation, you were effectively exporting the inflationary printing to all these other places around the world. Okay, so your interest rates are coming down. You're harmonizing collectively to produce things at a cheaper price, at more scale and more volume, and it's just total global efficiency. Think of it like that. That all works as long as you can keep printing and keeping everybody in this collective, like, global scheme. But like anything in nature, you reach the limitations of like what the capacity is. And then like once that starts to break down, then it starts to spin and the pendulum starts going the other way. And so back to the whole interest rate thing. So interest rates come down. The 10-year treasury during right before COVID, I think it was right before COVID, we got down to like 50 bips on the 10-year treasury. You know, a 0.5% was how much they would pay you to own this money for 10 years. That's insane.
Crazy.
It's crazy. Yeah. So that's how compressed all this gets. Now, what that means from a pricing standpoint, like what's the bond worth? The bond prices are sky high when the yields are let me explain it in equity terms so that people can kind of maybe wrap their head around it a little bit better. It's a little bit easier. When you think about equities, it's price to earnings ratios. So let's say you could go out and you could buy a company for $100. Let's just say it's like a little miniature company and you buy it for $100. If that company makes $10 a year, your PE ratio is 10. It's a 10-to-1 ratio. You paid $10 to get $1 of earnings out of the company on an annualized basis. Okay, 100 to 10. So that's a 10-to-1. Let's take the same pricing. Let's say we could buy that same company with the same earnings, that $10 of earnings, but we could buy it for $50 instead of 100. So now our PE ratio is a whole lot better. It's a 5, meaning we're getting a 20% return on our investment of $50. We're getting $10 back, right? We're making 20% annualized with that. The cheaper the price we pay, as that price comes down, let's say we could pay $20 for that company. Now we're making 50% a year, right? And that PE ratio is a 2. It's really good. If you take the PE ratio and you flip it upside down, that 2, and you flip it upside down, it's 0.5, right? So when you're looking at this and you're trying to figure out percentages, so that'd be a 50% return. Okay. Now think about 0.5% and what the PE ratio is on something like that. So it'd be like paying some sky high price. Okay. Right. It would be the equivalent of paying $2,000 for that same $10 of earnings. Okay. That's the price. So like the numbers I was using before with buying this company and the returns, those were all making sense. But what doesn't make sense is paying $2,000 for $10 of earnings every year. And that's how the 10-year treasury bond market was priced in 2020 COVID.
And you're essentially yielding negative because of inflation. So it's like,
well, you're not even getting into that. You're just talking nominal, assuming the money is fixed and not inflating. You were basically paying $2,000 for $10 of earnings in the bond market in 2020. Now, the number we like to throw around in the Bitcoin space is 8% M2 to probably 12% M2 growth. So now if you're getting debased because the units you're using to conduct these measurements in are at 10 or 20%, going back to the PE ratios of the company, right? If I paid $100 to own this company and it knocks out $10 of profit every year, but my debasement rate is also 10%, I literally am treading water by owning that company.
Yep.
With my savings. I'm not making anything. It is a wash. So now you go to the crazy prices that were happening in the bond market of 2,000 to 10, right? And you're getting debased at more. I mean, especially through COVID, my God, the debasement rate was nuts, right? 10% was super generous there for a couple years. I mean, the numbers are, and you'll hear, James Lavish, myself, Luke, Lynn, many others that'll come on shows and be like, the math just doesn't make sense. That's some of the really generic bond math to kind of help people think of it in terms of percentages of like how stupid and insane the whole, global market. And even today, Natalie, everything is still grossly mispriced, like absurdly mispriced.
This episode is brought to you by Casa, the leader in Bitcoin self-custody solutions, helping people like me secure their wealth with simple, powerful multi-key vaults. And now Casa is here to help businesses and even governments do the same. Introducing Casa Business, a secure, easy-to-use 3-key vault designed for small and large businesses with team signing capabilities and a web dashboard. Start your Bitcoin treasury the secure way and protect your assets. Get 10% off your Casa plan at casa.io/Natalie. If you use Bitcoin, you need a wallet that's fast, simple, and packed with features. That's why I love Speed Wallet. Send and receive Bitcoin or swap Bitcoin and stablecoins instantly. Shop gift cards, play games to earn Bitcoin, and explore mini apps. Download Speed via the QR code on the screen or the link in my show notes and use referral code CoinStories10 for 5,000 free sats. Next up, the Bitcoin Way. Bitcoin is only freedom money if you control it fully. The Bitcoin Way can help you learn the skills to properly secure your Bitcoin in 100% self-custody with zero counterparty risk. Go to thebitcoinway.com/Natalie to speak one-on-one with the best experts. Your security and sovereignty are priceless, so don't gamble with your future and peace of mind. And finally, Coinkite, the one-stop shop for all your Bitcoin cold storage needs. Their flagship cold card wallet is my go-to for cold storage because it's ultra secure, open source, and beginner friendly. Just watch my tutorial. Protect your Bitcoin like a pro. Visit their site, grab 5% off with promo code CoinStories. I think that Scott Bessent assumed that rates would come down, right? If they're going to have these tariffs, and the goal was really kind of to be disinflationary, but instead what we saw is bond yields actually spiked.
Yeah.
Is that right?
Well,
and then
think about it from this perspective. Through the petrodollar, anybody in Wall Street that's, 60, 70 years and younger, all they know is that when we go into a recession in the US, the whole world gets scared and they pile into US treasuries and they bid the prices and the yields collapse. That's what they know, because that's what's always happened for their entire lives.
Yep.
And now what we're seeing is the world isn't freaking out and running to US treasuries. They're freaking out and saying that thing is scary as hell, and I don't think I even want to own that. What do I want to own? Well, I want to own profitable equity. I want to own some type of commodity that is highly desirable, that the world absolutely has to have, or the industry around it. The concern there with owning some of the industry is highly levered and has massive capex, which is really impacted by, physical capex is definitely impacted by inflation. So that's even a hard place to go. And I mean, you've heard money managers say this for the last half decade or even the last decade. Like, I don't know where to go. Everything is so insanely priced. It's 2000 to 10 on the pricing. Like, what do I own? What in the world do I own? And the irony for me has just been like, Bitcoin has been the number one performing thing, the best Sharpe ratio. Like, it just knocks the lights out of everything. But yet these yahoos on Wall Street just still can't figure it out. It's just crazy to me, especially in the face of all the other crap that they have to invest in and how it's priced.
Okay, so let's turn away from macro and just talk about Bitcoin specifically. Why do you think, given this, Bitcoin's not over 100? I mean, what's actually happening?
You know what, Natalie? For me, it's a little surprising. Like, I thought when we were at 107, 108, I was like, hang on, because I think this thing, I mean, you and I were chatting offline. I was like, hang on, because I think this thing's about to go crazy. And it was been literally the opposite. So I'm as mystified as everybody else. Maybe it's a little bit of, we're still in a very fiat dominated world. And because we're in such a fiat denominated world still to this day, all this tariff talk and the expectation of like what's to come in the future just has everybody pretty scared, and they're hedging and they're keeping their cards very close, and they're just not leaning into something that is quote unquote risky with a lot of volatility.
Mhm.
That would be the only way I'd be able to look at it. But for me, with a huge Bitcoin bias, I'm mystified. I don't understand it.
I have to be honest with you, when I'm looking at the economy and like the consumer and what's been happening with home affordability, I really don't understand how, that air pocket hasn't given way for there to be this massive drop and for there to be a recession, because I just I don't understand how people are affording the higher prices in the most important things. And now with these tariffs, I mean, I know there's a debate of are they actually inflationary or not, but at the end of the day, tariffs are not. Prices are going to go up. And especially if they print, they're going to go up. And our wages always, lag on that. So I guess I just don't understand how we haven't had this massive unwind. And even with what happened in the last couple of weeks, again, things are kind of back to just chopping along and nothing's really given out so that they have to come in and print. I guess I don't understand the resilience.
Yeah, no, I'm with you. I think the resilience has been way stronger than anything I was anticipating. If I would try to, where I would look is I would be very interested in understanding refis on homes because everybody's house in the US went up significantly. And I would imagine everywhere else in the world too, through this process, home values were, doubled in most cases. And so if you have this windfall, this quote unquote windfall of illiquid value of your home appreciate, and you're dealing with these headwinds that you're describing, which are very real, I would imagine people were able to tap into that revaluation on the things that they owned that were highly levered, which increases the amount of equity that they own even more substantially. Or relatively speaking, I think that was probably tapped pretty heavily, and that's probably leading to a lot of the resilience that we're seeing. But I don't know that for sure. That would be my guess, though.
Interesting. Well, let's talk a little bit about some of the developments in the space over the last couple of weeks. Specifically, I want to talk to you about 21 Capital. That was one of the biggest announcements. Jack Mallers is going to be the CEO. It's going to start with a 42,000 Bitcoin treasury. And this was the result of a reverse merger, right, for Cantor Fitzgerald Equities. I forgot the name of it, but can you kind of break that down? What is this company? And does it compete with the Microstrategies and the Meta Planets of the world?
Okay, so this one is probably going to be tricky to wrap your head around, but if I was going to try and explain that, and I apologize, I haven't done a lot of research on this. Let's start off with MicroStrategy. Let me talk MicroStrategy, and then it might help people understand maybe what's going on here. And I might be wrong about my interpretation on this. So when I look at MicroStrategy, I break it into two buckets. I look at it first, just the operating company, which produces anywhere from $50 to $100 million a year in profit. Okay. And that's through their data intelligence software solution that they provide as a service. And then I would argue the bigger asset is just Michael and the team there looking at how overvalued fixed income markets are and just markets at large because of fiat currency. And because they're publicly traded, can go into the public markets, borrow a bunch of money. The market knows they're borrowing the money to buy Bitcoin, and then they stick that Bitcoin on the balance sheet. And because they're doing this flywheel of borrowing from public markets at very low costs and putting it on their balance sheet, it in of itself is an asset. It's a system of basically tapping an over collateralized market because there's been too much fiat printing and transmuting it into Bitcoin and putting it inside of a corporate veil.
Mm-hmm.
Okay.
And it's that intelligent leverage that Saylor always talks about.
Yes. But he's able to do this because the legacy system has been so over capitalized with fiat that it's almost like you're poking a hole in a dam and you're allowing that energy to flow onto your balance sheet. Okay. And so I would say that those are the two assets. Like if you were going to go onto their balance sheet and list out like what are the assets of this company, I would say those are the two assets. It's the operating company, and then just the sheer fact that he's transmuting fiat, like a pressure cooker. He's taking all that energy and he's putting it into Bitcoin and then putting it on his balance sheet to preserve it and lock it in time. And I think that's why it's so misunderstood as well, is because people are looking at what he's doing. Surely this can't last. But what they don't understand is how broke legacy financial markets are from, and it all goes back to the example we were talking about earlier, where like what person in their right mind would pay $2,000 for $10
Right.
of earnings on an annual basis? That's
Right.
insane, especially when everything's, being printed at 10% or whatever. Like that doesn't make sense. The pricing does not make sense.
Mm-hmm.
So what he's done is he understands this very deeply, and he's saying, I'm going to take this grossly mispriced universal fixed income market, equity market, all because you can do the same thing for equities and how they're priced at PEs of 35 plus. And you could say that's asinine for the amount of risk that's associated with these companies. It's mispriced globally. And he's taking that, he's bottling it up into Bitcoin, which is locking that value of what that is worth today, and he's freezing it into the future so that it can't be debased anymore. And that in and of itself is an asset.
Yeah.
So now let's answer the question on 21. Like, what's 21 doing? My understanding is that they're going to offer this service that we're talking about, that Michael's been doing, this bottling of, over capitalized, free and quote unquote free and open markets, either equity or fixed income, and transmuting it into Bitcoin on the balance sheet of any company. And they're going to do it for their own company. So they're going to do what Michael's doing, and I think they're going to offer it as a service for anybody else as well. So if you're a company and you just don't really understand the mechanics of how to do all this, I think you could kind of knock on their door at 21 and say, hey, can you do this for my company? And then they're going to offer it as a service for that company as well.
So what's the core operating business? Because to your point, the MSTR has the business intelligence software.
Yeah.
MetaPlanet actually has a hotel.
Yeah.
So it was a hospitality company. Each one of these companies that now put Bitcoin in the treasuries, they're doing something different from Bitcoin.
Yeah.
But
I think
this is going to be more of a pure play, they're saying?
No, I think it's definitely that. It's going to be the pure play of like what they're doing, because they're going to be a publicly traded company and through a SPAC and all this other stuff. But I suspect, and again, this is me not really doing a whole bunch of research on this, and it was announced yesterday. I suspect they're going to be a service company that offers collateralized lending and offers structured financial offerings to anybody that's a public market, so that if let's just say you have a public company, Natalie Brunell Incorporated, and you want to start you have your operations, and we'll just say it's podcasting or whatever, it's media, and you also want to do the same thing that Michael Saylor's doing, but you just don't want to have to bring that all in-house to hire all these CFOs and people to be doing that. So you go knock on 21's door and you say, hey, can you provide this service? I want to do these types of things too. I'm a publicly traded company. I got my own operations that I'm worried about, but I want to do these other swoopy things that Michael Saylor has been doing. Can you offer that as a service for me? And then they'll provide that with a fee, obviously, for the services of doing that, is what I think this is.
So it's going to trade under the ticker 21 XXI, I guess, right?
Yep.
But it's going to trade. What's the NAV going to be, like 4 times NAV? I mean, that seems overpriced right out the gate.
Yeah. So I've heard, this is just rumors. I don't think this is actually trading yet. But the ticker that you said, I think is going to be the ticker. From what I understand, it's going to be seeded with 42,000 Bitcoin, which is what, like 3.6 billion or 3.8 or somewhere in that ballpark, close to $4 billion, just on the books, on the balance sheet. And it's, let's see here. Is it Tether, SoftBank,
and
Bitfinex that are the ones that are seeding it with that Bitcoin? They're obviously, owners in it. And then it's going to go into the public markets, which is going to put a premium on whatever that Bitcoin treasury is. I would suspect it's going to open up at a premium to that. The rumors that I've heard on the amount is 4x the NAV. So let's just say the NAV is for simple, math, 4 billion. Yeah. So maybe it's going to come in at like 15 to 16 billion dollars is the rumor I've heard. If you're comparing that to Microstrategy, I think the NAV gets a little rich when it's probably like two times NAV, and then it trades anywhere from like 1.2 to 1.6 is where I think it's been typically like hovering. And it's dropped below NAV, I think is important. I know my entry points are below NAV. I had I don't have any additional buys above the NAV on it. Um, so yeah, so if true, if it does come in at 4 times NAV, do I think that's rich? Yes. Do I like Jack and the team and like what they're doing? Of course. Uh,
Yeah.
would I buy it at that? No. But
Yeah.
the market's going to find the price
For sure.
for anybody that's doesn't do their research and just emotionally steps into things. They might experience I suspect it's going to be a rough ride at the beginning. Lots of volatility as it kind of finds its place.
Yeah. Yeah.
But yeah, that would be my take on it.
I've heard that some people predict that all these companies that are early are actually going to become Bitcoin banks, including Strategy. Do you agree?
I mean, it only makes sense if you're sitting on all this capital. I mean, what's Michael up to? Like 400,000. Just think about, like, if you're sitting on that much Bitcoin, it really does become the place to go to if you need Bitcoin to do anything. I mean, it's just like the existing banking structure as far as if you're sitting on billions of dollars. Well, yeah, you're probably a bank if you're sitting on that much buying power. But this is going to be a way different type of model than legacy finance, obviously, and it's going to be fully collateralized, equity-based money that is going to be so much different than what we're accustomed to as far as like how it all
Yeah.
works. And I don't even know that I can properly define that. And I think that the fact that you don't see MicroStrategy going out and building, borrowing and lending and all this other stuff, I think tells you they don't know how it's going to be,
Yeah.
what that world looks like. All they know is that they need as many of those units as possible. And they're going to try to collect, it's like Pokemon. They're going to try to collect them all, and they'll figure it out when they kind of get there and what it starts evolving into, and then they'll just pivot into that.
Well, I think even the Fed put out guidance this week saying that now banks can move into the Bitcoin space. And
Yep.
I mean, the regulation is really starting to free up. So I would imagine that even the too big to fail banks are going to get in and they're going to be offering Bitcoin services, right? Do you
Yeah.
think that's around the corner?
Yeah, I think so. Yeah. And this speaks to the whole, I think, 21 capital strategy. They're looking at MicroStrategy and they're saying, well, how has Michael acquired most of his Bitcoin? Has he done it through operations, or has he done it through just tapping over collateral,
Capital markets.
over
Yeah.
capitalized markets? Well, it's the latter. Well,
Yeah.
we want to be in that game. We want to own that same quote unquote asset. We want to play that same game, because if we don't, we're not going to be able to acquire Bitcoin at the fastest pace possible. And they're looking at him and they're saying he's acquiring this. And what else is interesting is when you look at Tether and you look at their ability to stack Bitcoin, I would define it as operationally. They're able to stack Bitcoin. What is it? I would argue 70 times harder than Michael is with his operational business. 70 times, because they knocked out, I think, about $7 billion in earnings in the last year.
Right.
So if Michael's making 100 million and they're making 7 billion, they can stack Bitcoin from operations 70 times harder than Michael can.
It's crazy.
From a numbers standpoint. So then it's like, well, if they can stack Bitcoin operationally 70 times harder than he can, why can't they step into this other strategy of tapping capital markets, because they're all over capped? And if you're doing those numbers operationally, I could only imagine what they're backing on the other, and they're doing it in a very risk reduced way by doing this other entity, this other 21 entity. So from a governance standpoint, I think it's smart. I just think that the opening, what the public's going to see in the trading of this is probably going to be, there's going to be a lot of names calling. There's going to be a lot of people upset because they're going to go and just buy it because they don't understand how to do the math. I don't know, but it's going to be a wild ride at the open. I assure you that.
I did want to ask you, there have been people in the audience who look at this type of development and look at the institutional adoption, and they really are not for it, or they're very skeptical, or they're worried that this will somehow change the whole ethos of Bitcoin.
Mm,
What do you say to them? Because I think it's interesting that the Bitcoin community is really evolving,
mhm,
and we had a lot of people early on, the hardcore, I think like cryptographers, and we had, I mean, crypto anarchists and people who really don't want anything to do with government.
mhm,
And I feel like that has influenced even some of the early retail investors saying like, hey, this is completely out of the system and that's what I like about it. But
mhm.
now we see the system encroaching on Bitcoin and these massive institutions adopting Bitcoin, and the government maybe, eventually backing currency with Bitcoin. And so some people I can understand are getting nervous. So how do you speak to that feeling that is Bitcoin really what it was meant to be, as this peer-to-peer cash network?
Well, I think that the definition of peer-to-peer cash network, I can't stand the word cash in that. In my opinion, the thing that Bitcoin is truly solving, if we're looking at it as an engineer, you have to properly define the problem before you can properly present a solution to the problem. The problem in the world was there was no global peg. There was no global peg that could be trusted. That was truly the problem. That's why fiat kept expanding. That's why you got these crazy valuations, is because they'll just print more money and then it just continues to blow out and create chaos because nobody can trust the underlying fundamental unit. So there was no peg, right? That's what Bitcoin was solving initially. The fact that you can spend it immediately over Lightning and all these other things, in my opinion, are tertiary effects and tertiary solutions to a problem, which is the spending side of it, which is, you go back to the Bitcoin Cash fork with Roger Ver. In my
Mm-hmm.
opinion, the reason why Roger was just wrong, and clearly he was, look at the market cap. He was wrong because at the core basis, what was being solved for was a peg and not cash. Cash is an added bonus. It's the icing on the cake. And there's a lot of people out there right now saying that if we can't spend it as cash, it failed as. And maybe that's true. Maybe that might be true. I don't think it is,
Mm.
but and I think you also have to understand from an engineering standpoint the order of operations. You first have to have something that is a sound global peg that can't be debased
Hmm.
before. Wow, look at that! Look at these.
Wow.
I don't know how I did that, but you have to have
So
something that
perfect.
you got to love Apple. Even though you turn all this stuff off, it gets turned back on again. Um,
It was so timely.
so even if you don't have it as a sound basis in a peg, I think that the order of operations is it has to do that, and it has to do that in a no fail, no compromising way before it can ever achieve a status of a currency on top of it, right? And there can be a lot of debate around that, but for me, it's pretty basic, and it's the whole reason I came to Bitcoin in the first place, a decade ago, is because I was studying financial markets and macro, and I'm saying, how does this end? How in the world are all these governments going to come to a collective consensus that they can trust each other when everybody is racing to debase their currency?
Right.
There was no solution. People were telling me, "Oh, it'll be the IMF and their your special drawing rights and all this other stuff," which all required trust. And I was like, I don't think so. I don't think that solves it, right? And so then I see Bitcoin. I'm like, finally, here's something that actually solves this massive, huge engineering problem. And so, I look at it that way. I think that you first have to have store value, and it has to continue to appreciate in value because of its store value properties before people are going to want to conduct commerce and everyday. I think everyday payments and treated as cash, I think, is probably the better way to define it. But
Okay, so just to start to wrap up, I feel like this is really overwhelming for the average person. I've certainly gotten a lot of messages of just, do you think that everything's going to crash? Is Bitcoin going to go way lower? I don't even know what to tell people at this point. I mean, obviously, I think when the price is lower, it's a great opportunity to stack. And the 70Ks that we just recently saw was kind of a gift. But what do you tell people? Because this can all get very confusing. And it seems like we just don't know what this administration is going to do, whether you voted for them or not. Like, this has been
Yeah.
a little bit stressful.
Yeah. The message for me after all these years of being in the space is really simple: dollar cost average. Because as an example, let's say that you stepped into this market for the very first time at 70,000 or 69,000 on the previous cycle. You bought the top, but you continued to dollar cost average on a daily basis, a small amount through that entire downturn down to 16,000, then it comes back up. Once it got back to 70, you were up massively. This wasn't like a small gain for you from 70 to 70. It was a massive gain because
Yeah.
you captured all the volatility. And so when we look at Bitcoin's price action, a lot of the times people are just looking at the sheer tops, and they're looking at the percent growth from the tops or from the bottoms. And they're saying, wow, look at that performance, like from this bottom to this bottom. And it's really impressive. But I'll tell you what's really impressive is if you dollar cost average all of that volatility and you stick it on top of the nominal performance of the bottoms or the tops, the performance is out of this world, unimaginable. And so you don't have to think about it. You don't have to like overanalyze. You just have to like continue to chip away at it a little bit at a time. And what you'll find is this fierce volatility is your friend.
It's your friend. Yeah.
It is your friend. And like look at Saylor, right? He is worth a lot of money. What does he do? He doesn't try to time anything. He's just out there when he has fresh liquidity, he just buys. He's just dollar cost averaging his position over and over and over again. He's not trying to time anything. He's not trying to overthink it. And a lot of that is to the point that we made earlier, Natalie. You can't predict what Jerome Powell's going to do. You can't predict whether Trump's going to roll out tariffs to the whole world tomorrow and it's going to crash markets. And if you think you can predict these things, I just think you're being really naive and not objective and truthful with yourself. And so just take all that emotion and all that stress out of your life. And if you think Bitcoin's important and you think that, well, I don't understand it as much as, other people, but I think I should be taking 5% or 10% of my free cash flows and buying it every other week or every week. That's how you play this. Is you just continue to chip away at it, define how much you think is an appropriate allocation based on your cash flows, and then just do it. And it's a whole lot less stressful, I'll tell you that much.
Yeah, keep calm and stack on. All right. Well, it's been great to talk to you. I'm so grateful for the chance to record with you again, Preston. Any final thoughts, anything you want to leave people with?
Hey, the world is a good place. There is plenty of things to be hopeful for. There's so much things out there that I'm just seeing and just excited for. And I think that it's important for us to remember that the way we view and see the world, where our focus goes is where our energy is going to flow. And if you're out there and you're looking around and you're saying, this is a miserable place, my day's terrible. Well, unfortunately, that's the energy that you're pouring into the world. And that's what you're going to start getting back. So I would just challenge people. We are in an exciting time. We are in a spot that like you can live with a whole lot of abundance in your life. And boy, am I here for it. Boy, I'm excited for it. It's great to be a Bitcoiner, and I'm very excited for what the future holds.
What a perfect way to end this. Thank you so much, Preston. I'm going to link your work in the show notes, and congratulations on everything. It's great to see you I feel like just the happiest place you've been in your life. I've had the chance to get to know you over the last few years, and I feel like I've never seen you carry more lightness around, and that makes me really happy as your friend. So congratulations.
Thank you. Thank you.
Thank you so much for checking out this episode of Coin Stories. Make sure you're subscribed to the show so you don't miss any new episodes. If you can, turn on those notifications and leave us a positive review. They really help the show grow organically with new listeners. We have a free weekly newsletter. Sign up at thenewsblock.substack.com. This show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. I'm always open to feedback and guest suggestions, so please feel free to reach out at info@talkingbitcoin.com. I'll see you next time.